Hey guys, Akil here, and thank you for joining me for another video. I appreciate you taking a little bit of time out of your day to work on your trading and work on your trading with me. I promise I'll keep this quick. But in today's video, I want to talk about what to look for when finding trading opportunities. And this has been kind of a theme of the week, both with the traders I work with in the live room and on the platform, and with the handful of traders I talk to each week on social media. But before we get into things, for you guys that are new, because I know we have new viewers each and every week, I want to give you a brief introduction to who I am. As mentioned before, my name is Akil Stokes. I started trading way back in 2007. I got good right away, and now I am the best. Just kidding, of course, but I'm sure a few of you actually took me seriously, because I'm pretty sure there are people on the internet that will say that they are an overnight success and all that fun stuff. The truth is, I did start trading back in 2007 in the stock market. I had some pretty good success with stocks. I made the switch to Forex in dreams of getting rich really, really quick. And I struggled for a handful of years. So I was in the very same position that many of you guys are at right now, either struggling and just can't seem to get it, or in what Mark Douglas calls the boomer buster category, where you feel like you got a little bit of it, but there's that one thing missing. You're not bad enough to blow accounts, but you're not quite good enough to gain consistent profits. Real quick, if you guys look over to the chat on the right hand side of your screen, do me a favor, give me a yes or give me a that's me if that sounds kind of like the category you're in, the boomer buster. You're not horrible, but you're not quite good. Go ahead and type it in right now. Yep, as I thought, a lot of you guys fall into that category, and that's the norm. We talk about 90% of traders fail. That number is probably a little bit out there. There's probably about 40% of traders that fail right away. They're just bad. They come in with the wrong intentions, or maybe mentally they just aren't built to become consistently profitable traders, or maybe not built is the wrong word. Maybe they don't make the decision to do what's necessary to become a consistently profitable trader. But I would say that the majority of traders are in that middle ground where they just need kind of a little push in the right direction to turn around their trading success. And hopefully these videos that we put out here with Tier 1 Trading help to push you in that direction every day, every week, depending on what kind of level you're joining us with. Now, today we're going to talk about what to look for when finding trading opportunities, and this is going to be a follow-up of a video I put out just about a week ago where we talked about how to trade breakouts, and we took a look at a trading example on the Euro New Zealand. So if you haven't seen that video already, I'm going to throw in a brief clip just to recap it, and then we're going to follow up and take a look at the next trading opportunity that is on my radar. Right? You can see that we've actually put in a pennant pattern here, right? We have our impulsive move. Get rid of these VS1s, they're all over the place. We have our impulsive move down, our swing high to swing low, and then we have our consolidation in our tightening range, right? You can see the range starts out big, gets smaller, 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 until we eventually break out one way or the other. And again, the way that you'd be looking for, at least the one that's going to offer the most opportunity, in my opinion, is going to be a break to the downside. So breakout traders, this is one that you want to put on your radar for a potential breakout. Almost a day after I first brought to you this idea, and you can see it worked out pretty nicely. We did end up getting a breakout. We went past the 127 extension. We even went past that 169 even handle. I do think there is a little bit more room to the downside, but you can't complain with the move that we just got, and I'm glad I got a chance to share it with you guys. Now, as we dig into the live charts, I want to pop in and just really put an emphasis on this. If you're new, right, or even if you're old, you probably notice already because I say it almost every video, but I want you to focus on the process of what I'm doing. I don't want you coming into this video with just give me the trading opportunity, show me the trading signal, show me what you're doing so I can follow you and hopefully make some money, right? That is the absolute wrong idea. That's the exact opposite of what I want you to do. We are here to learn, right? And what I want you to do is focus on the process, the mindset, the routine, the ritual that I use to break down a price chart. Because I'll tell you what, many traders come into really trading with the wrong idea. They come into the markets each and every day and they got to look for trades. I got to find the trade. I got to find the buy. I got to find a short, right? Some type of confirmation bias or from CNBC or Bloomberg or some type of need or desire, kind of like a gambling mentality to feel the heart bumping and the palms itching and the need for action, right? Many of you guys have that, and that's what gets you in trouble. What separates struggling traders from successful traders is what? What do you guys think? Again, chat box to your right, type it in. What do you think separates struggling traders from successful traders? It's really the approach, right? So many of you guys are right. It's really the approach. What separates struggling traders from successful traders is how they approach the market. Struggling traders approach the market with the outcome in their sights. I have to find the trade. I have to be involved. I have to take something. Successful traders, we approach the market in a slightly different way. Instead of trying to find trading opportunities, we just look to do analysis. And we trust that if we perform analysis the right way, then the best trading opportunities will stick out to us. And we have no type of confirmation bias, or I should say this, the confirmation bias that we have is built off of what we analyze on the charts and not what we want to do. So I just showed you the Euro New Zealand trade, right? We had the breakout and it came further down than we even expected. Well, if you're a trader that is, say, late to that trade, you're looking at it, the first thing that comes to your mind is, oh, it broke out, I missed the trade, I missed the move, I should have had all these pips, but I didn't check my charts that day, whatever excuse you have. I need to get involved. I need to find some type of revenge. I missed out on profit, right? And now I have to get it back. And you come in with the wrong mindset. And what typically happens is you enter a trade too aggressively, you get trapped, you get stopped out, and someone else like me makes profit on your behalf. So what we're going to do as we dig into the charts now is I'm going to show you just the general analysis that we do, how we look at the opportunity. It may be a long opportunity, it may be a short opportunity. It doesn't matter at this very moment. All that matters is when the opportunity arrives, I know exactly how I want to approach it. So I want to start off by taking a look at the Euro New Zealand on a very big picture perspective, a bird's eye view, I guess you can say. And right now I'm on the 1 week chart. And before we ever look for trading opportunities or really understand what type of trading opportunities will be in our favor, I think it's important that we have perspective. We have an understanding of what price action has done, and that's going to help us predict what price action is likely to do next. Now, when you look at this chart in front of you, you can say that, hey, from really the beginning of 2018, we've been in a bullish trend. Excuse me, the beginning of 2017, we've been in a bullish trend for the last 2 years. And for you guys that are familiar with how we do rules for identifying a trend over at Tier 1 Trading, you can see that, yes, we have our new structure high, our outside return, our new structure high. And what we're looking at right now is a pullback. Now, you may, right, have a bias that says, okay, well, we're in a bullish trend, look for a pullback. This is a perfect opportunity to buy for a trend continuation trade. However, what's important to recognize is where that new structure high came to. And if we just draw a horizontal line out at this level, you can see that our last new structure high on the very right side of your chart really refused to violate the previous level of structure resistance that we have looking to the far left of your chart. And although this doesn't mean, hey, bullish trend is over, blah, 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 it does give us kind of a rider down that says, hey, this trend wasn't strong enough to achieve new structure highs. Add that to the fact that we have a very deep retracement. We know that deeper retracements mean weaker trends. We may be in store for a potential reversal. Now, what I'm doing right now is just putting together ideas. I'm not saying I want to get bullish. I'm not saying I want to get bearish. I'm just really taking what the price chart is telling me, right? I'm reading and dissecting the story that this chart is telling me. And I'm looking to just gain perspective about what's happening on the chart. And that's going to allow me, once again, to better predict what's going to happen next. And if you're wondering, yes, I am repeating myself on purpose, because when you repeat something, it really, you may not know it, but it ingrains it in your head. It ingrains it in your head. When you repeat something, you may not know it, but it ingrains it in your head, and it makes learning it a lot easier. So let's fast forward to where price action is currently at. We already talked about the retracement last week. We talked about the breakout. Now we are at what is called the decision point, right? We are sitting right at a previous shelf of structure support. And you can see at this level, price action recently tested that level 1, 2, 3, 4 times, each of the last 4 times holding before breaking out to the upside. And now we're back to test it again. And I call these levels decision points because what happens at this level is going to allow me to make a decision about how I want to get involved in the trade. And we use something called the if-then syntax, where if price violates this level, then I can expect, or predict, I should say, not expect, never want to rattle the market gods. If price violates this level, then I could predict a continued move downward. If price action holds at this level, then I can predict a little bit of a retracement upward. I wouldn't personally be shooting for a full-blown trend following trade just based on what I talked about previously, but I would feel comfortable taking this with sort of a counter trend approach. So let's talk about the first scenario. If price action is able to violate this level of structure, then where is price action likely to go? And the next level that I have on my radar is going to be right down here around the 62.50s level, right? It's 62 even. We're on a weekly chart, so it's all close together. But let's just call it 62.50s, 62 even level. And you can see that our move here is about 65.27. So this is going to give me about 300 pips of potential downward movement. And as I go down to my lower time frames, let's jump all the way down to a 240. What I'm going to ask myself during the week is this: how can I get involved? Zoom up a little bit. How can I get involved in a bearish trading opportunity that goes down to this level? And for that, I would simply switch on my trend continuation brain, look for pullback trades, right? We know that the market typically doesn't go straight down, although it could, I suppose, but at some point, the market kind of extends and retraces and extends and retraces and extends and retraces, right? And each time the market retraces, as a pullback trader, that gives me an opportunity to put on a short position and potentially hold it down to that ultimate destination. Now, for you guys that are Tier 1 members, how many of you guys were in the Q&A this past Monday? This is going to be Monday, the 12th, I guess it is. We talked about, we did a lesson on back testing, right? So, all right, so you guys remember that lesson, right? Do you remember the last topic we talked about? We talked about really position adding, scaling into a position. Now, again, I'm personally not a fan of it. I don't have anything against it. I just personally don't use it. I'm all about consistency and I'm very simple with how I trade. But this would be an example if you can catch a trend continuation opportunity on, say, a lower time frame, where you can implement that strategy of establishing a full position and then taking one off, adding one on, taking one off, adding one on, until we get to that ultimate destination. So if price action violates that level of structure, then I'll be looking for trend continuation trades to about 62.50, 62 even, all next week in the markets. Now, vice versa, we'll go back up to the daily. If price action holds this level, right? Let's say structure support holds once again. We do not get a violation. We see some buying pressure. Then I would expect some type of retracement. Now I'd be looking for more of a counter trend type of move. And what I mean by counter trend type of move, I'm really trying to get away from saying trend continuation versus, or trend following versus counter trend, because honestly, it's all in the perspective. You can have two traders looking at the same pair, looking at two different time frames, and a trend continuation trade can mean two different things in two different directions. So it's very, very hard to use that term unless it's very specific towards what we're talking about. But what I would be looking for is a counter trend type of trade, which means I'm looking for a short area of relief. I'm looking to get in and get out if price action holds this level of structure. And if that happens, two levels that I'll be shooting for is one, this minor level of structure right here, which is right below the 168 even handle. And then two, your secondary level of structure up here. Now, if we just bring, and these are all structure related, but we like teaching kind of confluence, and the more clues you have at any given spot, the more powerful that is. Well, if we just take a Fibonacci retracement from our swing highs to a swing low, you're going to see that we're going to have a 382 Fibonacci retracement right at this level, which happens to be an inside level and an outside level of structure too. And matter of fact, if we go back to the weekly, I didn't do this, but just eyeballing, and I feel like we're at a 382 right now. Let's just eyeball to see how good I am. Dun, dun, dun. If I'm bad, it never happened, right? But let's take a Fibonacci retracement from our ultimate swing low down here, about February 10, 2017, to our swing high. And look at that. Look at that. This level of support we talked about, right? Holding right at a 3-2 Fibonacci retracement. But wait, there's more. What movie is that from? It doesn't matter. Anyway, the 50% Fibonacci retracement, which before you say it, I know 50% isn't a Fibonacci level, but it is a psychological number. That's why I like to look at it. The halfway point is very important to us as human beings, right? Easy for us to kind of interpret. The 50% level is right at that 62 even handle we talked about for the potential bearish trading opportunity as well. Again, giving us more confluence, giving us more confident that, yes, that is a good place in which I should be looking for as that ultimate destination for that trade. So again, right now we're not doing anything. We're just doing analysis. I've set myself up for, I know what to look for. If this happens, then I know how to look bearish. If this happens, then I know to look bullish. And what I do now and going into next week, I just wait until the market tells me which way it wants to go, and I try to take advantage of it. So I hope you guys enjoyed that. It's a perfect example of what we call the if-then syntax. It's basically the process, the ritual that we use each and every time we look at a trade, right? Doesn't matter what time frame you're looking on, the weekly, the monthly, the daily, the 5-minute, the 15, a tick chart, a range bar chart. It really doesn't matter, right? The process of performing technical analysis in the market is the same way on every time frame, on every pair, really in every market. Now, that's not saying that different markets have their own personalities, right? The stock market is a little bit more trendy than, say, the Forex market. The crypto market as well. It's the crypto market, which is a little bit different. But if you could perform technical analysis, you'll be able to give yourself a slight edge no matter what market you're looking at. And that slight edge is all we need to maintain our consistent profitability as traders. So if you like that video, do me a favor before you leave. If you're new, make sure you subscribe to the channel. If you're not new and you just love it and you want to show me the love, type it in the comment section below. Give me a like. And of course, share this on social media, right? The word of mouth about what we're doing here at Tier 1 Trading is spreading. And it's not just spreading to the general public. It's spreading to some of the biggest firms and some of the biggest and top educators in this field. I'm talking hedge fund managers, I'm talking prop firms, and it's really cool that we're earning that respect. And that's because of you guys. You guys are spreading the word, you're getting it out there, you're saying, hey, these guys are the real deal. We're not lying to you about Ferraris and making millions of dollars. They're telling me that, yes, that can be a product of your hard work. If you want to work hard and earn your way so that you can buy a Ferrari and gold chains, then that's you. It's certainly achievable. But what is more important is learning to trade the right way, setting yourself up as a business so that you can turn your skill of trading into a profitable income stream. And then when you make income, you can do whatever you want with it. And I think people are really buying into that concept. It's a little bit different than what you typically hear on the internet. But if you talk to any professional trader, you'll hear the same message. And really what we're trying to do is just bring that message to the masses instead of just having it hidden under the glitz and glamour of the rest of the internet trash you see out there. So continue to support us. We love it. Share, like, comment, subscribe. I'll see many of you guys on the platform next week in Monday's Q&A session. I'll see many of you guys on social media world as I consistently interact with you. And for you guys that like this on YouTube, like this premiere feature, I'll see you guys most likely next week. We'll see with another premiere video here on YouTube. Oh, by the way, if you want to be notified of when these premieres come out, go down to that subscribe button. Make sure that little bell thing is clicked. That way, when I do set up a premiere, you'll know exactly when it's launching. All right, until next time, plan your trade, trade your plan. Thank you very much, and I'll see you guys next time.